What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for strategy with the ticker symbol MSTR. I will first be going over what I see in the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So it looks like price is trying to push up higher as of right now. Bitcoin looks like it's also trying to break out higher. Still below the $100,000 level, but it is slowly but surely working its way higher. MicroStrategy also bouncing off this support level that's holding nicely as well at the 320 level. There's like a zone between 310 and about 320 for support. Instead of a line, it's more like a zone. So it looks like price is still hanging on by a thread at that zone. However, there's still a bearish factor you have to keep in mind. We have this bearish trend line right here, and then also another bearish trend line. So two aggressive bearish trend lines are in play, and price has not been above the EMA since basically January 24th of this year. So it's been a while, so it's showing signs of weakness. But you can look at it another way too as well, that, hey, if price was that bearish, why hasn't it gone lower? So again, you can look at both sides of the story. Like, if it's that bearish of a stock, why hasn't it dropped lower? I mean, it had multiple chances to drop lower and it's failing. So if we just see a breakout higher, it's going to be probably game over for the shorts. It's going to be a short squeeze. We're going to see a massive run up, and this will outpace Bitcoin because that's what it normally does, and that's what it's designed to do. It's designed to be outpacing Bitcoin. It's designed to be more volatile than Bitcoin. Designed to give you more gains but more risk than Bitcoin. So that's what I'm expecting to do. A lot of people are just throwing in the towel. They're giving up on the stock. Let's just get back to first principles. Life on a Bitcoin standard will get easier over time. Life on a fiat standard will get harder over time. I mean, as you can see, just dating back to when Bitcoin came out to the world, I think it was 2009 when it started being available to people. I think 2008 was the white paper released from Satoshi Nakamoto. In 2009, it was actually mining for the public availability to mine this crypto. So it's been about 15 years, let's say. 16 years. So anyone who held on Bitcoin practically any time, let's just say like a few months ago even, its life has gotten easier for them because how they've been able to buy more things with that Bitcoin. But let's say 15 years ago or 16 years ago, let's say instead of buying Bitcoin, you held the dollar, whose life got harder, right? It's obviously the people who had the fiat. Why? Because fiat is designed to lose purchasing power over time. It's designed to expand. There's no cap on the supply. Bitcoin has a cap on its supply, and it's not manipulated. Well, obviously, it's on a chart, so I mean, again, that's debatable. That's another story, but it's not centralized. It's not controlled by just a select few people who can control the inflation rates, the interest rates, all this stuff they need to do to control the dollar. So again, life on a Bitcoin standard will get easier over time for you, and life on a fiat standard will get harder for you over time. So what do you think MicroStrategy is doing? They're building their company on a Bitcoin standard, which means it should get easier for them over time. Imagine you have two companies, one that's just holding Bitcoin on their balance sheet and one company that's not holding Bitcoin on their balance sheet. The company that's not holding Bitcoin on the balance sheet, they're going to have to struggle with higher prices in the future. It's going to happen. They're going to have to raise their prices, which means that they're going to lose some customers. Customers aren't going to be able to afford their product, and they're going to have to continue to automate to still have a competitive edge in the market. If they don't automate, then it's game over for them because competition will wipe them out because you'll have other companies who automate and are able to lower their prices. So it's a very cutthroat type of environment. Business has always been pretty cutthroat like that, but now it's even more cutthroat as technology continues to expand. AI becomes more available, and automation is not even it's more of a requirement at this point in the future. So MicroStrategy can just hold their Bitcoin. All that productivity gains will go towards MicroStrategy as long as they hold their Bitcoin. Again, there's always a caveat, right? That's the risk you're taking. They hold their Bitcoin. They don't lose it. It doesn't get stolen. They don't sell a large portion of it. Obviously, they sell a little bit, whatever. It's not a big deal. But as long as they don't sell a large portion, then it becomes a big deal. So you have to get back to first principles of what the company is, how they're acquiring the Bitcoin as well is very important. They're not leveraging Michael Saylor's house, and they're not doing crazy things, right? It's all strategic. It's all long-term thinking. So again, it's still a very it's going to be a very, very profitable company just by holding Bitcoin. It's going to become easier for them over time. Anybody else, the competition, is going to be harder for them to earn a profit over time. They can just hold Bitcoin, and their purchasing power is going to continue to just go up over time. That's just how it works. I can explain it more in other videos, but basically that's just a simple look at it. It's going to be easier for you over time if you hold Bitcoin on your balance sheet than if you don't hold Bitcoin on your balance sheet. It would be almost not a good. It would be practically not a good idea in the long term to hold a company that does not have Bitcoin on their balance sheet, because they're just probably going to get wiped out. Because there's going to be more competition, more automation, more AIs, and you're just going to be climbing it's an upward battle at that point, because you have to grow your profits. Because to fight inflation, you have to grow your profits as well. So it's just an uphill battle when you don't have Bitcoin on your balance sheet. So it's going to be much easier for MicroStrategy and to continue, surviving in this type of environment, especially when they're the ones with the most Bitcoin on their balance sheet as well, by far. So again, just get back to first principles, relax. And this is also another important note to make. MicroStrategy, yes, it's not going up, or strategy for the what's it called, goody two shoes. Who cares if it's MicroStrategy strategy, as long as you understand the same chart strategy. You could say that, okay, at least it's not falling. It would be different if MicroStrategy was not going up or falling when Bitcoin was rallying. Bitcoin is not rallying. It's just also consolidating after a large move up higher. So again, it's fine that we're doing this because it's not diverging at all. It's still following a similar cycle as Bitcoin playing out. So again, not much to say on the technical front, but a lot of things to say in the fundamental sense. Again, just monitor these trend lines, monitor the support level. We'll see which one we can break first. Again, if it does break lower, it's not the end of the world. The target is still at much lower prices of 240. So as long as we still can stay above it, that's a good sign. Even if we do reach it, that's still not the end of the world. A lot of times, measure moves can mark a bottom and price can reverse off of it. It'd be more bullish if price doesn't reach it or partially reaches it, because then that means that's a sign of weakness by the bears. Because let's say they dropped the price this much, and then in the future you're like, well, why couldn't they drop it that much again? So it shows signs of weakness in the bears, and we can see a rally take place and squeeze out all the shorts. So that's all I have on the daily chart. Not much to say there. Let's take a look at the weekly chart on the log scale. Here's the weekly chart on the log scale. Again, long term still looks very good. Someone said a 31-year-old cup and handle. I don't know how they got 31 years. This is 2000 and we're at 2025. So that's a 25-year cup and handle. I mean, I don't really look at patterns. You look at the buying and selling pressure that defines the pattern, not the pattern in itself. So look at the underlying reason why that pattern is forming, not just the pattern itself. Because a lot of times you'll see a head and shoulder not play out as a typical head and shoulder pattern, because the market was still bullish in the context. So you have to look at the market, the imbalance between buying and selling pressure, or the market makers, market participants who are moving around the price, creating the patterns, not just the pattern itself. So let's see how this develops. As right now, it looks pretty good. Long term, still in a nice uptrend. You see it's been going up since basically it crashed back here in 2002. So it has been going up, slowly consolidating for a long time, going up, crashed, going up, and then we'll probably see another crash, then probably go up again, something like that. But overall, it's just taking its time. Long term still looks very good. And we'll see if we'll see a drop down first and then a rally, or a rally soon. So all I have for MicroStrategy in the daily weekly charts is Vee Trades, and thank you for your time.